Okay, so personal question, right? What do you do if you go ahead and wake up in the morning and you go ahead and rub your eyes because you're just getting out of bed, then you pull out your phone and then you see that your stock that you very much follow is down after they just dropped earnings? Do you sell all your shares? Do you run around and scream with your head chopped off in a way, right? Like a chicken. Bad analogy, but welcome if you are new. I keep things real around here, and today is going to be all about SoFi because they just dropped earnings. So this morning, their earnings dropped 7 a.m. Eastern Standard Time. I actually was getting out of bed around 7:20 a.m. I don't really like when SoFi drops their earnings early in the morning. I really don't care because I've been invested in SoFi since February of 2024, and SoFi has a tendency to very much either pop on earnings and then sell off later in the day or sell off after earnings, which has resulted in me buying a lot more shares. And yes, I did actually buy some shares, more shares of SoFi here today, which I'll get to momentarily. But on a serious note, welcome if you're new. I cover a lot of stocks on this YouTube channel. I'm also doing a public profile challenge to 100K. I'm going to be showing my public profile that I made for this YouTube channel later in today's video. Today is all going to be around SoFi, so if you're a SoFi bull, you're a SoFi bro, SoFi sister, let me know down below in the comment section how long you've been invested in SoFi, or maybe if you're trading SoFi, if you're a trader. I am also a trader, but SoFi is a long position for me because even if you are a trader, you should have long positions and be bullish on long-term companies. Very much making a diverse profile around long-term investments, short-term investments, maybe even some trades as well too. That's really my philosophy. Been in the market for 6+ years now, and I've seen a lot. And oh man, today is going to be even more of a volatile day because right now it is 10:29 a.m. Eastern Standard Time. We got the Federal Reserve meeting this afternoon at 2:30, and we have the most uncertain Federal Reserve meeting probably since, honestly, 2022. 2022, I started paying attention to the Federal Reserve, so did everyone else in the market, and this meeting has like the most anxiety around it for so many people. A lot of people that have a lot of anxiety around the Federal Reserve meeting today are a lot of people that have short-term or maybe even long-term bets, options primarily, people that are not really, they're not really digging their feet into the ground and saying, hey, I am following great companies. I don't really care right now that there's a monetary, a macro environment, macroeconomics 101, monetary. So inflation, deflation would be theoretically we're in a full-blown recession. Microeconomics 101, supply and demand. Obviously, we are in a macro environment hurdle around inflation, okay? So, going back to my question that I just asked at the beginning of today's episode, what do you do if you wake up in the morning and your stock that you know is going to be dropping earnings has already dropped their earnings? A conference call is going to be happening in the next like 40 minutes-ish. I did listen to their conference call. Phenomenal. I'll get to that momentarily. What do you do? Well, I'm not a financial advisor, but this is really common sense. You don't go on social media. You don't go on YouTube. You literally go to whatever stocks that you follow. You literally go to their hold on one second. Where is this? I literally just had this thing up a moment ago. Hold on, my computer is there it is. Okay. You go to their investor relation page. There we go. Okay. I'm on SoFi's investor relation page. I got this bookmarked on my web browser that I use. All of my stocks that I am invested in, even every stock that I'm either taking a long position in. SoFi for me is a 10-year hold, and the reason being is because the management team has given me that vision. Yes, obviously the management team is only really guided 3 years out to 2028, but they're laying down the foundation to be a banking giant around a financial technology institution that ultimately is a disruptor in the banking sector. So all these big banks, like in the next 10 years, they're going to be in trouble because, well, the baby boomer generation is not increasing, okay? I don't mean to be disrespectful to the baby boomers, but that generation is leaving our reality. Gen Alpha, Gen Z, I'm a millennial, 38. Although I very much relate a lot more to Gen Z because I use technology a lot more than the average millennial. And what is after Gen Alpha? I believe it's like Gen Bravo or something. They're not going. They want fun banking. They want everything to be a video game orientated. They want everything to be technology orientated. Big banks like JPM, they're just going to be like, that's what my grandparents use. That's what my parents use. I want to pick something fun. So that's the reason why I'm super, super bullish long-term on SoFi, despite their stock price. Okay, so pretty much, you wake up in the morning, your stock is down. You go to their investor relation page, 101, okay? What do we got here? SoFi reports second. Okay, so I was literally getting out of bed, and I was on my phone. I was also asking Google Gemini as well, too, cross-referencing, pulled up their earnings, and what is the first thing I see on here? Let me go ahead and zoom in a little more, and this looks sexy. Actually, let's go ahead and zoom out a little bit. Okay, this still looks sexy, even though it's a little zoomed out as well. SoFi reports second quarter 2026 with record net revenue, record member and product growth, net income. Okay, so don't really look like at the numbers per se. Pay attention to the percentage, because here's the reality. There are people in the stock market that they look at big numbers. I know this is going to sound crazy. There's a lot of newbies in the market, but you got to be paying attention to growth rates regardless of the number, okay? Yes, like 1.2 billion, that's a big number, but understand, keep it simple, okay? Let's go ahead and say that you have a 20 billion market cap company like SoFi. Actually, SoFi, I think, is honestly below 20 billion, but just keeping it simple, right? Now, SoFi, 20 billion market cap, they're growing. Obviously, they're putting up their revenue quarter over quarter now of exceeding $1 billion, okay? So every quarter, they're putting up $1 billion, okay? Now, let's go ahead and say you have a company with a $1 billion market cap, and they're only putting up maybe 50, maybe $100 million per quarter, okay? So you have one company that is producing on a yearly basis $4 billion of rev, and then you have another company, very much smaller market cap, obviously only producing maybe a couple $100 million or maybe even $100 million, give or take, right? However, the smaller market cap company, they're growing on a compound annual growth rate, a CAGR. They are a super hyper growth scaling company. They're growing, let's say 30, 40% year over year. Now, let's say you got the $20 billion market cap company pretty much growing year over year at 5%. Ooh, wait a second. This company is producing more revenue. Yeah, they're probably more attractive, right? No, okay? It's all about the growth rates. It's all about the CAGR. That is what separates companies from a value company to a growth company. It what separates people like myself. I'm a growth investor. People that are value investors. A value company, honestly, would be a company like PayPal. PayPal has a 4% growth rate, okay? Another value company, You can very much look at consumer-driven companies. Walmart could be a Costco, okay? You can even look at the S&P 500, like the major ETFs, very much, right? Value, okay? Value takes out volatility. When you have companies with very, very high revenue, high growth rates, they're going to be volatile. People that get into stocks like SoFi that haven't been in the market for a while, not putting anyone down, I'm just being serious. There are a lot of newbies. I used to be a newbie, okay? You got to be able to handle the volatility. If the volatility is not for you, you got to find stocks and you got to find maybe ETFs that are for you. And if you don't want to play the game and you don't want to ride the roller coaster of the US stock market ain't for you. Okay, there's other things to invest in. Obviously, I highly discourage just leaving money in a savings account like I did all throughout my 20s. Worked extremely hard, built a lot of wealth, well over 6 figures, a lot of savings, and I chose not to really invest my money up until, honestly, Rona 2020. And the reason I pulled the trigger on investing in Rona is because it was a crash of a lifetime. So glad that I took it. The harsh reality is that if Rona never happened, I don't know if I would have gone into the market. Crazy, right? Utterly crazy. Right now, well, I wouldn't be making stock videos on YouTube. I can tell you that for sure. I have other YouTube channels, video game channels, and I would definitely be doing, that type of stuff. But I mean, yeah, it's crazy, right? Growth rates. The higher the growth rates, the more volatility stocks are going to be. That's just how it is. And if you don't like it, well, what are you doing in a company like SoFi that's extremely volatile with the macroeconomics, right? So look at these numbers. Look at these numbers, okay? Adjusted net revenue up 40%, adjusted EBITDA 44%, loan originations. If you're not familiar with SoFi, that's probably going to be, you got to really dive into the company to understand what that means, but that is very bullish, okay? Member growth. So SoFi calls their members, aka clients. I am a SoFi member. I do have a SoFi's checking savings business account. So yeah, I am in their ecosystem. So a it's a fancy name of way of like saying members. I do a lot of live streaming on Twitch TV, video games on there. People that subscribe to me on there, which is a paying subscriber, I call my paying subs on there sexy subs or hoobas. I know that may seem, a little cheesy in a way, but it's what I name, it's a cliche type name and stuff, right? So SoFi's clients are essentially their members. Okay, product growth, 42%. They have a lot of products, and that's very bullish. So, I mean, do you see anything on here that is wrong? I didn't even really look at anything else, and do you know what I did immediately? I was on my phone, and I literally just clicked the buy button. Now, my public account on this channel, if you've been following me, it is a Webull account, although I really wish that I just opened a new Robinhood account. My private account is Robinhood. Two great brokerage accounts that I believe in is Robinhood, especially if you just want a great, easy investing buy account. Webull is phenomenal for day trading, just trading in general, and not to mention it has great moving. A lot of people use Webull because it's very much a free version of TradingView in a way. But yeah, I bought some shares. I actually bought some more shares here not too long ago, but my Webull account has not updated just yet. But I'll get to more of that momentarily. But otherwise, I mean, every single thing around here, their earnings are just phenomenal. Absolutely phenomenal. Look at their members' growth. You're talking, and these are in the thousands, which means the millions, okay? So we're at 15.8 million people. They are accelerating just absolutely crazy. Products per member, the more that each member use their products, I actually may actually get a SoFi mortgage in the near future. So I mean, I'm gonna be further into their ecosystem myself. Another big thing on here, financials breakdown. To do anything else I really want to highlight. Highly encourage anyone that is new to this. Very much. Oh yes. Furthermore, they raised their guidance. Hold on 1 second. Hold on. They ended up raising their guidance. Yeah, that's right. So last quarter, they did not raise their guidance, but Anthony Noto and the management team, they ended up raising their guidance. And they basically are forecasting 1 to 2 rate hikes. And they literally raised guidance that we may get rate hikes. And they literally said, yeah, it doesn't even matter. We're going to grow just fine. You want to talk about a management team that just like dropped a ball, like a ball in the good sense, not a bad sense, not drop the ball in a bad sense. They dropped the ball on bears, okay? Why is the stock down? Because of freaking fears. It's a macro environment fearful like market. SoFi triple beat. Last quarter they didn't triple beat, they didn't raise their guidance. They ended up triple beating. So the thing about this company that a lot of people really just don't understand is that when the macro environments go away, which they will go away because nothing lasts forever. One of the biggest problems in life with people in general, and I've been in this situation myself before, is that we get so used to things that we think it's the norm. It's not the norm, okay? The macro environments that we are in, it's not normal. This type of macro environments it's something that we don't normally see, okay? Yeah, I got in the market during 2020. I didn't get in the market 2010 when macro environments were different, but do you want to know what? I do my due diligence, and I'm a businessman, but I'm also a history buff. Look back in history. What happens when macro environments constraints go away? Well, everything gets better for the stocks and the companies that are affected by macro environments. So that's the reason why I'm extremely bullish. Now, if you've been following my YouTube channel for a while, I'm doing a public account profile challenge, taking a couple 5 figs to 6 figs. It was 18 months that I started this account challenge, and then I had to lower it down to 17 months because I just kept depositing large sum of money back when the market was free falling, primarily February and March. And I got to update some of this stuff here. But basically, pretty much, I've already deposited $3,500. So I've already preloaded my public account all the way up until November. I was going to be depositing $500 per month, but I said, you know, this market is just free falling. I got to preload some of my deposits. And that's not a bad thing. That just means, hey, I'm buying the dip on tremendous companies. So, public account 101. If you watch my videos last week, this account was actually over like 52 grand. I do have some crypto as well too. Very happy to be holding crypto right now because I'm very bullish on crypto, especially for next year. First time that I bought crypto since 2021 here. But yes, I am holding Ethereum. Okay, so if you are new here, like I said, welcome. I'm a raging SoFi bull. And on my private account, I have a SoFi average of $7.41. I'm also holding 1,642 shares. 42 shares. 1,642 shares. SoFi right now, their market cap is $19.38 billion. Very much not what a lot of people are liking to see. But then again, a lot of people not liking this is really around like traders. That's pretty much about it. What positions could I theoretically take a trade in? To be honest, ServiceNow is running up significantly a lot quicker than I thought it would. ServiceNow very well could be not a long-term investment for me. I personally consider a long-term investment anything realistically between, I want to say, maybe 1 to 3 years. AMD, I'm super bullish on. Their earnings, I believe, are going to be very much crazy numbers. And I've been buying AMD publicly on this account as early as, I believe, January or December. So about 7-8 months ago. On my private account, I've been buying AMD since Liberation Day. I got AMD shares, like, I believe in the 80s. Like, oh yeah. Very massive position for me on AMD. But I believe AMD is either going to be doing one or two things. One is AMD is going to scale up like Nvidia did. And when I say that, I'm not saying AMD is going to take over Nvidia, even though there are some AMD bulls that are pretty much saying that. I'm essentially saying that AMD is going to outperform Nvidia when it comes to the stock price, okay? So, sure, AMD, I'm looking at their numbers for the next, like, maybe potentially 3 years. But if the AMD stock price runs up, I could very much be taking a lot of profits. SoFi, on the flip side, I'm looking at a generational opportunity. So I got long-term investments here, and I also got some shorter-term investments that I may be cashing out maybe less than a year or a little more than a year. I don't really consider that to be swing trading per se. I actually swing traded Oracle earlier this year. I built like a small Oracle position, and then Oracle went up by 40%. And I'm like, you want to know what? I can deploy that money elsewhere. And yeah. So SoFi, very, very long term. SoFi is the number one company in my two profiles where it is going to be a long-term hold. And I'm going to be covering SoFi for a while because, like I outlined, the baby boomer generation is not multiplying, okay? They're going away. And I don't mean to be that in a disrespectful manner, but this is a generational company that's going to soak up so many technology-driven people, and also people that really want a very fun kind of banking financial experience. They don't want to go to a bank. They don't want to balance a checkbook the old-fashioned way. Who the hell does that nowadays, right? My mom still does that. I love her so much, but I'm like, Mom, everything's online. Why are you balancing your checkbook? Balancing your checkbook means that you're writing stuff down, okay? Because that's how you used to do stuff many years ago. So, yeah, I ended up buying more shares of SoFi today. If you've been following me, so if you watch my videos back in October, November last year, my SoFi position was actually up by, on this account, this public account, my SoFi position was up by 120%. But my total cost was about $4,900. So I have theoretically now almost doubled my total cost on this account. Why is that? Because the friggin' stock keeps going down and the company keeps going up. Like, it's a very simple game. The company is going down, the company's going up, the stock price is going down. Eventually, SoFi stock price, eventually we're going to be fundamentally, undervalued very soon, okay? It's going to be one of those things where it's like, what are we doing, SoFi? It's going to be like a PayPal situation. I was a shareholder of PayPal. I actually sold PayPal a couple weeks ago when the acquisition was announced. Ironically, right now on PayPal, I don't think the acquisition went through, but I'm glad I got out. Very, very small loss that I took on PayPal, but PayPal at 41 bucks. It was undervalued, way undervalued. So, SoFi, if we go down to, let's go ahead and say $12.56, me personally, I'm going to be buying more long-term shares. And you're talking, we're getting near like some very low levels, very low level. And Anthony Noto stated today that the reason he continues buying the stock is because he believes in the company. And do I need to say any more? So the last thing I'll basically pretty much say is check this out. Anthony Noto did an interview on a retail channel several weeks ago. Actually, I think it was like a couple months ago. Basis Points YouTube channel. And it was a phenomenal interview. And Anthony Noto stated that SoFi is trading times tangible book value. Now, Anthony Noto, and this is all different now, because obviously the company is growing year over year. So, oh, yes, by the way, SoFi said earlier this year that they were going to be growing 30%. SoFi's growing more than 30%. They just put up numbers of, it's a lot more. You're talking closer to potentially 40%. So, like, come on, okay? It's very different. Very their numbers, their growth rates are just absolutely crazy. If you're new to the stock market, look up this stuff if you don't believe me, because if you're going to be investing in growth companies, there's a reason why people, when they want to buy a magnificent company, they go to Meta. Meta's growth rates are the highest out of all the magnificent companies. Meta's growth rates are more attractive than Microsoft, than Amazon, Google. It's obviously Tesla used to be Magnificent Seven. Now it's definitely not. But I mean, their growth rates are just phenomenal and steady growth rates. Now, SoFi, their tangible book value. Anthony Noto stated that SoFi's trading at 2 times tangible book value because of the macro environments, inflation, right? Take away inflation, SoFi's a hyperscaler. The stock should be between 25 and 35 bucks. That's a bold statement to say. So you're talking about a 3.5 to as high as a 5 times multiple. Is the company executing? Yeah, the company's executing. So when you have a company continuously executing, continuously putting up great numbers, I mean, for me personally, I'm going to be a buyer. But then again, my vision is obviously different than other people's visions out there. Obviously, people, they have visions very much in the 6-month time frame. I'm looking beyond 6 months. I'm also looking beyond 6 years. People obviously have different viewpoints around many different things. But I mean, overall, at the end of the day, if you are a long in SoFi, you got to remember why you got in the company. You got to remember what your long-term vision is. There's going to be a lot of short-time noise. But me personally, with SoFi, I'm very much ignoring that noise. Prime example, Adobe. I ended up selling Adobe several weeks ago for a loss. And the reason being is because, hey, the management team, the CEO is leaving. The CFO is resigning. I started buying Adobe back in like the end of December last year. And I was buying Adobe all throughout like January. And then out of the blue, the CEO is going to be stepping down. And now the CEO, like the management, I don't, that changes my strategy. Changes my strategy entirely, okay? On a closing note, Anthony Noto has really stated himself as being a refounder, because a lot of people don't know the history of SoFi. The history of SoFi is that they were just primarily, like literally a bank, only a bank, and all they did was student loan refinancing back in like 2018. Anthony Noto stepped on deck and basically pretty much refounded the company. And ever since then, hey, 2018, let me actually fact check myself. I don't want to, how many SoFi members were in 2018? Don't want to give the wrong information here. 2000, yeah. Oh, give me a break. Look at this. How many SoFi members in 2008? 600,000 SoFi members in 2018. Okay, I think that basically concludes the video, right? If you want to follow my content, you know what to do. Smash all the buttons, and I'll see you all tomorrow for a brand new episode. Probably won't be around SoFi. Tomorrow I'm going to be going over the Federal Reserve, all the stuff they did. Stay tuned for more stuff, though, later.